Hey guys, welcome back. Today we're going to look at the upcoming Airbnb IPO everyone is talking about. Airbnb just updated its S1 IPO filing. You can find it here on the SEC government website or via the link in the description. I will be using data from this report since this is the only available information we have. So with this update, Airbnb plans to sell 50 million shares, which is roughly 8.4% of the total 600 million shares available. Airbnb is setting the price range of $44 to $50 per share, giving it a valuation of up to $35 billion. The company will list on the Nasdaq under ticker ABNB. It is expected to hold its IPO sometime later this month. So should we buy it? Well, let's do our 5-step analysis. By the way, if you haven't already, try to watch our video on stock analysis for beginners, as I go into more details about the process in that video. And as always, if you find this video helpful, please smash the like button and subscribe. Okay, so step 1, is this stock within your core competency? I.e., do you know the products or services that Airbnb offers and how the business works? For me, this is a yes and a no. I have used Airbnb during my travels and rented house in Hawaii, California, and even internationally in Hong Kong and Vietnam. The app was easy to use, the transactions were quick. My rental experiences were good because I carefully checked the reviews and rented only from top hosts. However, I've never tried the experience or tour offerings, and I've never offered my house for rental on Airbnb, though I do know quite a few people who are hosts and have made very good rental income. Next, step 2. Do you understand the business operation and its performance? Does it have a strong business model? Does it have a competitive advantage? Is it profitable, growing? Will it continue to grow in the future? So first, yes, Airbnb has a strong business model. Its main business is offering people a unique place to stay. It gets revenue from guests and hosts. Guests are able to stay in the rentals that are usually cheaper than hotels. Hosts are able to rent out spare rooms or houses and make extra income. Airbnb has grown dramatically over the past 13 years and is now in over 220 countries, serving over 825 million guests and have earned over 110 billion. Its direct competitors include hotels like the Hilton, Marriott, and various rental platforms such as Booking.com, Expedia, Tripping.com, etc. However, Airbnb has become so popular and become so large that they now have a huge competitive advantage. They are now top of mind among most travelers looking for a place to stay. They definitely have disrupted the hotel industry and will continue to capture more market shares. Okay, so now that we know the business model is strong, let's look at the fundamentals to see how strong their business operation actually is. During the 9 months ended September 30th, the gross booking value at Airbnb plunged 39% to $18 billion. Revenue fell 32% to $2.5 billion, and they suffered a net loss of $697 million. Like most travel companies, Airbnb has seen a big drop in business due to the pandemic. Airbnb quickly cut about 25% of its staff, and luckily the business has bounced back thanks to a surge in rentals in rural areas as people looked for safer escape. Thus, for the third quarter, although revenue fell 18% to $1.34 billion, they were able to generate a profit of $219 million. That compares to a loss of $575 million last year. As for valuation, since Airbnb is a growth stock and does not have any profits, we will look at gross profit multiples because that is a more accurate indicator of its valuation. On average, if we disregard 2020 as an outlier, it has been growing about 35% on average over the previous 3 years. If Airbnb expects to trade at 30 to 35 billion valuation, this would give it a roughly 9 times 2021 gross profit multiple, which is only slightly higher to its competitor Booking Holdings. Though we expect Airbnb will grow faster than Booking because they will be able to capture more market share. Hence, the value seems fair and reasonable. Next, for step 3, we must look at the current economic condition and is it favorable for Airbnb? The current condition, as you know, is quite bad. COVID cases are rising every day and millions are unemployed and there is still no global travel. As such, Airbnb has suffered greatly. But luckily, some demand and cost cutting has helped improve the business. If we expect to see a vaccine in 2021, Airbnb's business could see a huge growth due to the large pent-up travel demand. Though in reality, I think we may have to wait until 2022 to get back to pre-COVID travel normalcy. Next, step 4. Is there a catalyst or future event that would drive the stock price higher? Airbnb has begun to offer experiences, which is a good complement to their rental platform. Travelers can stay in neighborhoods where people live, have authentic experiences, live like locals, and now can spend time with locals in approximately 100,000 cities around the world. Airbnb is also focusing on improving the app, such as the in-app language translator, so international travelers and hosts can easily communicate in their own language. These efforts should really help to increase user retention and also generate more substantial revenue stream as it grows larger. Additionally, once there's a vaccine, the stock could also be a great recovery stock. Though there is some risks. The biggest risk according to Airbnb is that laws, regulations, and rules that affect the short-term rental and home sharing business may limit the ability or willingness of hosts to share their space and expose hosts to significant penalties. This could have a material adverse impact on Airbnb's business. However, this is no different than other sharing economy platforms such as Uber. Thus, if we believe in the long-term potential and have a long-term view of the company, the risk seems to be acceptable given the high potential in stock appreciation. Next, step 5. Let's look at the technical analysis. Since this will be a new public company, there is no trading data for technical analysis. As for valuation, we think it is priced relatively fair. Thus, if we accept the risks and we want to buy, I would recommend a buy price of under $58 or less, which would keep it around the $40 billion valuation. Though I predict the stock is likely going to pop a lot higher on the first trading day. Hence, if this happens and you are not able to buy it at the recommended price, let's just wait to see if we can get in at a better price later. And now for my final tip and reminder. Never buy all at once. No one can predict if prices will go up or down on a given day. Thus, if price goes down, we want to be able to have some money to buy more so that we can lower our average cost price. I hope this video was helpful. Thanks again for watching. Please don't forget to subscribe.